But we're back with our schedule. Welcome back to Wine and Wisdom, everybody. Hopefully all our technology goes well today. We've got a few little surprises hooked up for you. We've got a bit of news to share from the past couple of weeks. Lots going on, Andy, out there in the marketplace. So pretty pumped about that sort of stuff for everyone as we go along. But making sure that we get ourselves organised. Mate, you've got a little bit of an intro to share for everybody in the...
Mate, that's it. We'll get into it. Who would have thought it 20 years ago when we both left school that we'd be on this television program sharing such incredible broadcasting capabilities in the year 2020 amidst the pandemic, Jason? Nobody would believe it.
Mate, I tell you what, you and I have been having a good time when it comes to... some boys with toys, let's say it, when it comes to our technology and stuff. But mate, my teachers wouldn't believe if they were dialing in right now about what we're up to. I'm quite sure that's one thing I can tell you, mate.
Mate, I can mirror that one. I can absolutely mirror that one. So, mate, what's been happening in your world this week?
Well, listen, mate, I'm pretty pumped about what's going on out there in the world of real estate because there's some things afoot, there's some changes afoot which are really positive for property investors, and I'm going to go ahead and I think it's this one here, actually, share my screen, and I'm going to sort of hide myself up here in the corner, but really. What's going on out there in the news, gang, for us as property investors? Well, the Treasurer, Josh Frydenberg, has said, right, that's it. We're going to get rid of this restriction when it comes to lending. Yeah, chopping it off, Andy. I'm pretty pumped about this one. I think this is going to, add some pretty significant value, make that a bit bigger for everyone. Add some pretty significant borrowing ability and value to everyone in the marketplace. And it's certainly going to unlock investors' ability to get going because owner-occupiers were still taken care of, but investors were paying the price pretty significantly when it came to borrowing. I've talked about this one a couple times, and you and I might have had these conversations 50 times really in the last 2 or 3 years. Lending since late 2017 had become more difficult, literally for a good 2-year stint, and probably to the point where I was pulling my hair out and redoing strategies for my clients. Really, I did a live video. It was only probably 4 to 5 months ago where I said, a client, an everyday property investor buying 10 properties, it's over. It's never going to happen again. I called it. I was a bit down in the dumps. I'm like, it's not going to happen. We need to change our strategies. I don't think we're going to get back to 10, but I think this move for property investors is going to get us back to around the 6 to 8 properties or around that $3 to $4 million worth of real estate, Andy. So I'm pretty pumped about this. The rules are going to change. It's not in law yet, but this law, which was imposed by the Rudd government many years ago in 2009, after the subprime loan crisis, really didn't actually have any teeth, any biting power until APRA got involved in 2017, the Royal Banking Commission, and they really revved it up. They dusted the big thing off and said, right, that's it, gang. We want to make this thing work properly. And they really went to town, and it put the skids on the Australian lending scene. And also it actually put the skids on the Australian property market when it came to property growth. A lot of people didn't even notice, but property prices actually dropped in 2019 in general, close to 8% across the country from their momentum in the previous years. So mostly that was in Sydney and Melbourne in the house market because of the lending issues. Many other markets still continue to grow. So I'm really excited about this. I said this the other day, I'm all big Kev about this one. If you remember Big Kev, Andy, a few people do. I'm all Big Kev about this resurrecting of just sensible lending. It's actually gone the other way. It's actually stupid, and it's time to get the ability to borrow back on the agenda. And it looks like this will come in March, which is exciting because that's going to unlock some real opportunity in the marketplace, mate. So I'm pretty pumped about that sort of stuff as we're going along. So, what are your thoughts in that sort of space, mate? You get exposed to this stuff a bit. Where do you think it's going to maybe improve or cause some havoc?
Mate, well, let's just salute the well-spent money by the government to do the Royal Banking Inquiry. Possibly only several $100 million that's just been flushed down the toilet as far as all the rules and regulations, which I think is kind of ironic, isn't it? Because it's protecting Australians until the government gets into trouble, and then they go, whoops, let's forget about everything that we put in place and let's just repeal it and let it go back to the way that it was. I think that there is, and it's no more relevant and prevalent than what it is now as far as the political position is within Australia. And I don't want to get too political, but it's the Royal Banking Inquiry was one that was, trying to protect people. But there's a difference between a protectionist government and a good government with good regulation. And what we're probably seeing now, and it's quite contentious, but I'm down in Victoria, right? We're seeing a huge amount of government policy and over intervention into our lives. And this was, the Royal Banking Inquiry was another example of where they tried to protect too much and tried to take too much control of an area that really they shouldn't. They should allow markets to normalise, and they should allow markets to go through the normal market cycles, because the more that they intervene in this stuff, the more that they screw it up moving forward. And we were pretty good through the GFC as a government. We didn't intervene too much as far as fiscal or monetary was concerned. So we kept our powder dry for now, but we're really pushing that dangerous boundary of becoming too much of a sort of almost totalitarian type of a communist regime or government regime. And I say that a bit tongue in cheek, but mate, I think it's good to see that get loosened up again. And I know that, it was back in the day when Molly Meldrum fell off a ladder, and then in Victoria, they tried to mandate bloody bicycle helmets when you get on a ladder. It's like, buyer beware and be educated in what you do. And so, mate, I'm quite happy to see that come back. Yeah. The effect of it will be interesting. I still think that the banks will be very cautious about how they lend because they've got their balance sheets to look at and worry about at the moment. But, mate, I think it's a step in the right direction, and hopefully we see it. But what we know is the banks don't move quickly.
They don't move quickly.
It'll be a little while before we see that come into play.
Yeah. And we were talking about this one the other day. I don't know if, anyone listening in paid too much attention, but, massive fine the other day. Westpac, $1.3 billion. And you and I were laughing. You were like, the share price went up the next day. And I remember calling you, Andy, what the fuck? What? And you're like, well, they know what the cost is now. Now they can get down to business. They can put it in a balance sheet. They can write it off 1 year and then they'll be right the next. It's an interesting one. It's a bit funny, and a couple of comments coming through from everyone online, like Ian saying here, people need to be more responsible for themselves. And I completely agree. It actually frustrates me. It frustrates me that, the government, the intervention was almost like, cotton wool intervention, Yes, we got to have some codes of behavior and ethics by professionals. I'm massive on that. You and I belong to industries that often attract some, maybe some people who aren't necessarily out for their clients as the first port of call. And, there has to be some codes of behavior there. But at the end of the day too, customers, you can choose to have a Wagyu beef or you can choose to pay your mortgage, and if you choose the Wagyu beef, then you deserve a kick up the bum, that's really, at the end of the day, as far as I'm concerned, pretty important as we go along. And Alison's sort of saying, people need a bit more financial education. That's why we do this Wine and Wisdom, Andy. That's why you and I love what we do. Our passion is, rooted in education, and helping people around their financial literacy and taking it a little bit more seriously. Yeah.
Yeah, but so and I agree with the comment. People do need to be more educated, but you can't have it both ways, right? So you can't get rich quick and expect to do it while remaining completely ignorant to what you're doing.
No.
Right? So if you're going to take big risks, and I always talk about this when I talk with my clients about property, and I don't talk about it much. I refer to you guys, but when I say, look, how long did it take you to figure out your car? And I don't lead them into discussions. What car are you driving at the moment?
Me?
Yeah.
A Porsche Cayenne.
So when did you buy it, and how did you choose it?
Well, my first one. I bought my first one in 2007, and my recent one probably 3 years ago.
So the one in 2007, what was it up against? What were you picking from?
Range Rover. That was it at that point in time, and probably the Mercedes. I can't remember. I think it was an AMG. Remember the really grunty looking.
I remember it. Yeah, the G63 probably. Did you take them all for a test drive?
I did.
Yeah. How long roughly did you spend deciding on your car?
Well, probably 20 minutes in each of those cars, maybe.
20 minutes in each of the cars. So probably, 3 weekends worth of research. So here's the thing, 3 weekends worth of research, probably countless amount of time on the internet.
Yeah.
If you're going to buy a property, doesn't it make sense? So your car, you're going to add another 2, you're going to shift the decimal point a couple of spaces to the right. So wouldn't it make sense that if you're going to spend 100 times the amount, that you spend 100 times the amount of research to do it? And for me, what I've seen a lot of people do in the property space is they jump in, they go, bang, that's it. And it's like, hang on, dude, you just dropped $600,000 or, $750,000. And just walk me through your decision-making process. Oh, I met this guy and they said this, and then he introduced me to the broker and it's done. I'm like, get out of town. So I think, people need to be responsible, and it's not the government's responsibility to get in and manipulate those sorts of circumstances.
Yeah.
And I'm not going to call it idiot-proof, but we can't idiot-proof the economy. Otherwise, we will be walking around in cotton wool.
Well, that's the world of an entrepreneurial capitalist system, right? You have to have opportunities and risks that people take. That it's calculated. You employ people. You've got a product. You've got a business. You want to grow something. I'm a big fan of that process. I've benefited from it over the years. Certainly learnt a few harsh lessons over the years, making sure that we self-educate, Andy, in that sort of space, understanding how to run a business and those sorts of things. And literally the same thing, is what I say to my clients when they want to buy property. Do your research, understand this is a 15 to 20 year journey. The first property you buy won't be the same as the last property you buy. Hopefully it'll improve as you go along. And sometimes, the first one you bought, you'll probably get rid of because it wasn't purchased well, and you'll replace it into the future. So we talk about those ones all the time. So, but yeah, mate, listen, a few other little things in the market, in the world. It's interesting. There's this 2-speed property world going on right now, there's Sydney and Melbourne, which are flat. There's no disasters looming at this point in time. I still think we've got a little bit of shakeout to go, but I think everyone's kind of not expecting anything other than a bit of a shakeout in Sydney and Melbourne just because of the pricing. With this easing of lending, I think that's actually going to help. It will help. It'll help distribution and access to sellers for genuine people who need to sell. So I think that's going to be quite good. However, Sydney and Melbourne are kind of holding their own, or maybe just sort of dipping a little bit just because, their marketplace is a little bit uncertain. But, mate, the rest of the country is off and running. Perth, Brisbane, Canberra, those 3 markets, Adelaide, Hobart, Mate, it's like Perth heading towards a rental crisis because there's nothing to bloody buy or rent. We just talked to a client over there. There was like 150 people at an open home on the weekend. They're like, we're bidding for places to rent. It's reminiscent of conversations I've had in the past, and I did a video on this today. We teach diversification, Andy. I'm sure in your world that's a staple of, financial literature, not all your eggs in one basket. We teach it location-wise in real estate terms, like, don't invest all in Sydney, don't invest all in Melbourne, don't invest all in Brisbane. I like at least 3 locations. Our preference is 5 over a property portfolio. But, at the end of the day, if you owned property in Sydney, but you had 1 in Perth and 1 in Brisbane and 1 in Canberra, your other markets are performing, even in the middle of a pandemic and probably one of the biggest financial crises we've seen, maybe even ever in our economic times. So, interesting times there, mate. And really it's playing out in vacancy rates around Australia. So if you have a look, this is the one, it really is at this moment in time, having a bit of a look here. If you have a look at Sydney, the vacancy rate in Sydney and Melbourne's really the only one. The vacancy rate has sort of gone up quite significantly from quite a low vacancy rate, which is 2% to 3.4. But if you have a look at the rest of them, Brisbane down, Perth significantly down, Adelaide vacancy rate down, Canberra vacancy rate down, Darwin vacancy rate down, Hobart a smidgen up, but still under 1% vacant. When you look at like,
because everyone's leaving Victoria, Jason. They're migrating north, south, east, west. They're going everywhere.
We're out. Interesting times. Anyway, there's my point of the communication is, often the information that gets the most airtime at times like this is the negative stuff, because that's what the media likes to promote. That's the article that gets read the most. But shiver me timbers, the vacancy rates have plummeted in nearly every capital city of Australia other than Melbourne. What does that mean? If we didn't have COVID right now, how would you interpret that as a property investor? And you'd be like, whoa, this thing's blowing up. Everything's going mad here. I'm going to dive into those markets. You know what I mean? So it's an interesting one to make sure that, we keep an eye on. And last but not least, this makes me laugh. This was from Westpac, right? Not 4 months ago, they're like, oh, the world's going to end, 30% drop. And now, like 4 months later, they go, no, mate, she's going to go up. Like, I don't know. It makes me laugh, Andy. It makes me laugh. This sort of stuff, like, how can you be an economist and just make wild claims in the positive or the negative, and often 99% of the time be fucking wrong, plucking it out of your bum, and still have a job. Anyway, it's an interesting one, but
they went to school and they got a doctorate. That's the reason why. That's the reason. They ask no questions. You feel at times you just feel like this, don't you?
Yeah. That was a train wreck the other night, wasn't it? Anyway, yeah. Bloody hell. Well, there's a few people having a bit of a shout out here. Nev, how are you, mate? Good to see you. Vivian, Simone from the sunny coast. Say hello. Justin, James, Shay, she's my favourite. My wife, by the way. Shay, she's dialed in. She's very nice. Emily, Ian, Alison.
Don't forget to say hello to Mrs. Fenton.
Mrs. Fenton. I'll try not to swear tonight. But, mate, listen, for me right now, the last 2 weeks, we didn't do Wine and Wisdom last week. Both you and I had a course on. We were doing our own learning, which was awesome. Really for me, the real estate market is shaken out a little bit. We are seeing what things might look like. Victoria is slightly loosening up. There's open homes and stuff again. I think we need another 2 to 3 weeks before we'll see what the true momentum of the lockdown. Let the sort of the build up get through and then sort of see where it sits. But mate, for me right now, I can see some interesting trajectories. I've said it quite often, and all the parts of the puzzle are coming in. You know, lending's loosening, supply is literally stuffed in the major cities because no one could have access to funding. Vacancy rates are actually lowering in most of the cities. When we see jobs kick back in and migration kick in, they're the last two pieces that will really blow things up. When and if they kick back in, they'll be the parts to really sort of, you know, the petrol on the small fire that is flaming real estate right now. So that's my call. I reckon that's going to be thrown on the fire in 2022. Personally, I think that's when it's going to sort of come. We're going to chuck a few logs on, but they're not really alight just yet, and then they'll sort of chuck some, you know, some flame accelerant on the marketplace for me. So, mate, you know, that's what's been happening in the world of real estate, mate, out there as we see it in the last few weeks since we caught up. But what about you, mate? What's going on in the equities world? I'm still pretty keen to buy Tesla, Coach.
Hold your horses. Tesla's dove about 20%, I think, just recently. I haven't been watching it day to day and haven't watched it this week, but it's certainly fallen from grace. But there's quite a few things that are good to chat about. And there's a lot of themes that are coming out. So this is one which is now transpiring over in the US. And I sort of said to you, I've gone, one thing markets don't like is uncertainty, and we're going to chat about the election, have a bit of fun in a moment. And you know, we won't hold back any punches. And, that'll be good fun. But so this is the reality. So there was sort of a moratorium for the banks, which I'll chat about in a little bit, for jobs based on the job keeper equivalent over in the US. But Disney just announced 28,000, Shell just announced 9,000, and the energy sector globally has taken a big, you know, 1-2 punch. First with the sort of oil crises, if you will, and the shake-up between Russia and the Saudis, and then the pandemic coming. And obviously, you know, we're using it in-house, but we're not using it on the roads. And as a matter of fact, the US economy, airlines actually equate for, I think it's about 9.5% of the total oil consumption of the economy. So that's, is
that right?
Yeah,
that's huge.
Well, in Australia, apparently it's 15% because of the distances that we travel. We actually fly a hell of a lot more based on the usage. So it's understandable.
Never would have guessed that. Yeah.
Yeah, so understandable that these companies are really suffering, but they're innovating. Don't get me wrong, they're innovating. They're using this as an opportunity to get slim and ready for the game. And then Continental's obviously with 3,000. And then we have a look at the banks, and this is an interesting one. So Goldman Sachs smashed 1% of its workforce. Would you think it's that much? Well, maybe yes, maybe no, but equates to about 400 odd people when they're in profit. When they're in actually quite significant profit. So they are using it. And obviously so with the banks, they had a moratorium sort of, they said, look, if you back us and we get these job allowances, we'll hold off until the end of the pandemic. So I'm not quite sure what their definition of the end of the pandemic is. But
yeah, right, yeah.
But this is where we're going to have a little bit of fun in a moment. So US dollar retreats on stimulus hopes. So Australian dollar rose 0.3% against the greenback, and we're up again past, I think, 72 today. I think I saw us go up above there. I'm looking at a few American bills that I want to take on board. So I'm looking pretty closely at that. So this all comes down to uncertainty, and I've always said it. Markets don't like uncertainty, and you remember that I actually had this chart up some time ago, which was the GFC, and all of the coloured areas were stimulus, and when they switched it off, and as you can see here in January 2010, I'll see if I can annotate this. No, not allowing me to annotate. Oh, there he is. You can see here it fell off the cliff, right? And that scared the living shit out of America. And the Fed just quickly jumped on and started printing money and started flushing it back out again, which is the green.
Yeah.
But, so two things is market doesn't like uncertainty. And at the moment, there's a few things that are happening. So just check out a few of these headlines like this. I saw this today as I was just Googling around, and I just thought it was absolutely hysterical. Right, so dollar retreats on US stimulus hopes. Right, now check out the other headlines. Australian shares to recoup losses on Wall Street rise of based on rises on stimulus hopes.
You need to zoom in a bit, Andy. You need to zoom in, like pinch and zoom. Oh, yeah, perfect.
So Australian shares recoup losses as Wall Street rise on stimulus hopes. Australia's shares end higher on stimulus hopes of easing curbs. Australia ends at high. So basically, and look at this next one. Trading day, stocks recover ground. Is it purges? This one. ASX to fall as oil dives. US stimulus hopes waver. Coronavirus, Scott Morrison rules out ending curfew in Sydney airports. Actually, I didn't get all of them in here, but basically the article's read, market falls on stimulus, on failing stimulus hopes. Market rises on stimulus coming through. Market falls on, so basically, and there was like 3 or 4 hours in between each of the news articles being posted. So completely contradictory news articles. One saying that markets are going up because stimulus is coming. The other one saying markets are falling because the stimulus hopes are dashed. And I was looking through it, I couldn't help but laugh, and so I thought I'd bring this up. But it illustrates a point, and so some of the points are around about this. So in Australia, what's happening in 4 days?
Daylight savings.
Is it? Shit. I never remember that, mate.
I think it's on soon. It actually annoys the crap out of me. It just messes my whole world up. But anyway, I don't know. Is it daylight savings? I know it's soon anyway. I think it's next week.
No, so we've got the budget.
Ah, yes.
We've got the budget that's coming up in 4 days.
What's the go, mate? I'm interested.
So on the old budget, well,
yeah.
So my belief, and I don't have any inside scoop here, but I reckon it's all going to be jobs.
Yeah.
I reckon it's going to be all about jobs. It's going to be large amounts of fiscal stimulus. So the difference between monetary stimulus and fiscal stimulus is monetary stimulus is like helicopter money and printing more money and pushing it into the economy, right?
Yeah.
Fiscal stimulus is where the government actually put it into resources, building roads, and infrastructure and things of that nature. So my belief is we're going to see a massive stimulus package that's going to go into infrastructure, into that fiscal range. Right?
Yeah. Well, I pulled this one the other day, and it's interesting. Like, there's been huge talk about these infrastructure projects, and they haven't awarded any of their contracts just yet. So, if you have a look at the last 2 years, 2018, 2019, the government has been going pretty hell for leather on let's get some infrastructure in play. Some of the biggest infrastructure projects in Australia's history were approved and awarded in 2019. The biggest one in Victoria's history, the rail crossing stuff, putting it underground and taking it, like, that was the biggest infrastructure project in Victoria's history. Last year got awarded and actually the year before and was well underway. Badgerys Creek second airport. Everyone's asking, do we need a second airport now? We don't even use the first one anymore. I think
all of the new immigrants coming out of Victoria.
Yeah. But I think you're right. I think the government's sitting on those contracts and going, right, let's just go hell for leather. I'd love to see what this looks like after the budget, after they crack on with what that might be, because that certainly also drives real estate, the world of real estate. When jobs are good and those infrastructure projects really crack on. An example right now, just around the corner from my place, they've decided to bring on, the Queensland government has decided to bring on a new train station in a place called Pimpama, probably 15, 20 minutes north of where I am, 4 years early because, the Queensland stimulus. So that's actually now going to bring significant amount of value to the real estate in and around that that location. So, mate, yeah, interesting. Jobs, huh?
Right, jobs, and that's my theme for the Australian election. And I was chatting with Malcolm, who will get on soon enough into Wine and Wisdom, and he said, "Geez, it's interesting times. You've got Liberal governments doing Labor policies," and so I never thought about it from that perspective. So it'll be very interesting because they will try and do more Liberal style policies in this, and that's going to be the interesting little tweak, right? So you would expect to see tax cuts in there, which is probably more expected now. So you will see those Liberal kind of policies come in, but it must be a very conflicting position for them to be in. But so here's the thing. So this is the period of time that we're in, right? So we've got election time happening, and that's both really. I call it the election time because we've got the budget out in Australia, and we've got the US election. And so what I feel is happening, and this is just an opinion piece, so this is not fact. Don't go out and buy anything with it, but it feels like in Australia the federal government is basically holding fiscal stimulus and monetary stimulus, especially for Victoria, as an axe to the Labor Party and Dan Andrews. Now that's what it feels like, right? Because they said, you show your hands first, Dan, you got yourself into this, you show us what you're going to do, and then we'll show you what we're going to do. And since then, they've done nothing, right? So for me, it's quite clear, and whether it's true or not, it's another thing. But for me, I feel that it's very, very, it's clear that they're using that as a weapon of politics, which pisses me off because it's like, in times like this, it's no time to use politics to you serve the people, you don't serve yourselves. But politics is about serving yourself. So, we all saw what happened with Mr. Trump in the election speech, because the same thing's going on in America. And all I can say is that watching Trump against Biden, it basically felt a little bit like this. It just felt like Trump was just standing up there and just beating the shit out of everybody like a spoilt little boy like Stewie Griffin. And most of us at home were sitting there doing this as we were watching it. And, when this is happening around the world, I think we're at a reasonably sad state of affairs. And basically, Trump was basically doing the same thing. And the Senate over in the US is very much polarized on this stimulus. But so let me ask you this, and this is a real danger for US equities, right? This is a very, very big danger sign for US equities. I'm not saying they're going to fall, but this is something, if you're going to be going in big to US, you need to be very, very aware of this. If they do not pass it now or soon, then the lawmakers go, and the lawmakers won't be back until after the election. So we've got some 30 days until the election in the US, which basically means if they don't pass a stimulus now, and they're using it as a weapon, right? They're using that as a political weapon. We will do this if we get in. We're going to do, and you can't pass any policies, right? Because they don't want Trump to be able to do any more helicopter money.
Yeah.
So I think it's unlikely, and I'm not a political journalist by any stretch of the imagination, but I think it's unlikely that you're going to see a big stimulus. And based on the fact that I just said that, it'll probably drop tomorrow in the biggest you've ever seen, right? And if they do, we'll be on like Donkey Kong, because what we do know is that if they stimulate, and markets have been jumping up and down with the news of stimulus versus no stimulus, so on and so forth. Yeah. And so we know this to be true because we've seen it happen before. If they stimulate, and when they stimulate, the market will rise as a result of the helicopter money coming into into the population. So, so they're using it as a weapon. But the fact is, if they don't pass it, 30 days, and then they've got to get sworn in, and then they've got to make policy, and then they've got to pass it into law. So if they don't do this soon, there's a high likelihood that there's multiple months that are going to go through as the stimulus has been repealed, because basically Australia is copying the US in a lot of ways and other countries around the world. Yeah. And for the same periods of time as well. So their stimulus is being repealed right now, which is why I showed those job losses in Disney and alike. If they don't put a stimulus through, and they've got to get it through the Senate, we mightn't see any money come through until after the election. Now, that's going to be a really interesting play for small to medium businesses of the US. And potentially catastrophic for small to medium businesses in the US.
Mm.
There could be special resolutions and things like that passed, but that's something absolutely to be watching for. And in Australia, the same thing, because here's what I've been pontificating more recently within the Australian market, is that you pay a premium to go into the share market in Australia, and usually it's called the it's not the liquidity premium, it's just left my brain, gone. But you pay a premium above your cash rate. But here's the thing.
Why is that? Like, why do you pay a premium? Because it's a safer market, or it's not as volatile, or
you're in term deposits at 4%. That's almost guaranteed, right? It's basically guaranteed.
Yeah.
So you're going to want to be able to see an 8, 10, 12% return if you're going to put your money at risk of going up and down.
Yeah.
So you want a premium return for putting it at risk.
Yeah, gotcha. Yep.
Liquidity risk premium. So that's what it's called. And that's basically how efficient markets are kind of priced, if you will. So here's the thing, is that when we got to around about 2% on term deposits, that's roughly where inflation was sitting. So now that we're diving below and we're getting 1%, so you're guaranteed to lose 2%. You're guaranteed to lose 1% going into term deposits. So there's two things that happen here. You only hold money in cash if you believe that you're going to end up in deflation, which means the costs of goods come down significantly, or costs of goods come down. So if you hold money, the value of your money, the money that you've got increases in value because milk becomes cheaper, petrol becomes cheaper, computers become cheaper.
Yep.
But people don't believe that deflation is actually going to take place. So if you're what it's doing is it's pushing money into the market. So what we've got rates now guaranteed to lose money in cash, people going into the markets, which is a good reason why US has just gone absolutely berserk, but there are some strong fundamentals over there. And then you've got this very confusing period of time where there's a lot of political grandstanding. And for me, I'm excited from it because it presents a whole lot of opportunities, because let's face it, people are not, once they know, not going to be putting their money to guarantee to get losses. And this is why we're looking at different ways of investing right now. And so, as you said, fiscal stimulus, 2009 after the GFC, the biggest spend we've ever seen. So we're looking for things like infrastructure in order to invest in. The government gets private companies, quite often they're listed, or Macquarie will come along, badge something up, put it together and start to work on these projects and talking big scale projects.
Bring the capital for it as well. I mean, like I sat in a meeting the other day, my lawyer, brought me to this meeting and he brought me as a bit of a delivery mechanism for one of these conversations he was having, and it was this family. They were in, it was an investment business that was in charge of private wealth. And the families that they managed across the world was over $1 billion. And they were like, the defensive assets are just nothing. We're looking for something a bit more interesting and edgy. And they were looking for all sorts of alternative short-term lending strategies, lending products in the marketplace. And one of them that I was there talking to these guys about, which I've never got any airtime from anyone else ever in 10 years, is that as a property agent, you can have someone buy off the plan, you don't get paid for 2 years. So you got to sort of carry all your expenses for 2 years. And I was saying to those guys, listen, if you said I can get my money now, but you're going to make a margin on that, that commission that I'm owed in 2 years is pretty well 99% guarantee. Once your contract signed, you can't get out of it. But I'd like the money now rather than later. I'm happy to drop X percent. And they were like, oh, we love it. Let's go. Can you place 100 million? It's like, I'm like, holy dooly, So, no one's ever listened before. And, all of a sudden, because it's he's looking for a house,
because you can ride fixed interest on the way down, because as bonds get cheaper, you end up with a capital increase.
Yeah.
the value of the bond. So you make money as yields decline. And here's the other thing is that the RBA is due to meet on next Tuesday as well. So it's really going to be interesting to see what the RBA do or whether they wait for the budget.
Well, there was a call the other day that they're going to drop, chuck it down.
Yeah, so the market. So we're looking at the 3-year bonds and the 90-day bank bill rates. And so if you have a look at them and where they're sitting, they're pricing in a rate of 0.1%. So it's likely that it's going to go down from 0.25 to 0.1%. Right? There's not a lot further you can go as far as capital increase. So we're gone. We're gone as low as we can go.
We're done.
If you believe in deflation. And this is something that I'm facing right now. We don't have a lot of the answers to it. We're just looking for it at the moment.
Yeah.
Because there's not enough infrastructure funds out there to invest in at a retail level. At a wholesale level, different. Like you got 100 mil, you want to punch into something, then you can get into it. But if you've got $10,000 in a portfolio that's 100, like we're looking for those things. And so infrastructure, which is almost now, in my perspective, because if you look at asset management, the 60-40 portfolio, 60% in shares and property, 40% in defensive assets. Now, defensive assets are not returning and they've got no growth potential, but they've got limitless loss potential because the converse is true. As interest rates rise, bonds lose value.
Yes.
Now, not only are you not getting a return, you've got downside risk of interest rates going up. I don't believe interest rates are going up for a while. So you're going to be safe for a bit.
Yeah.
But the question then becomes, you have to seek assets that are not defensive assets in order to get a reasonable type of return. So looking for lending possibilities, looking at infrastructure, which is now quasi semi-government backed type projects.
Yeah.
People are going to have to look to different sources in order to be able to get income that is comparable. And you're going to have to take risks because as soon as you dump money in the bank, guaranteed to lose money.
Guaranteed lose. And, at the end of the day, I don't know, is it a self-organising monetary system or is there someone smart going, well, there's too much money being parked. We need it to be in the system, flowing around for jobs and activity. I mean, at the end of the day, that's what the system needs, right? It doesn't need the money sitting around doing nothing. It needs the money deployed into stuff, creating jobs. So, I get it. I'm, from my point of view, a capitalist point of view, it's like, well, the money's meant to go to work. Let's looking for a job. Let's go. But it's really interesting. So, when you say about that money, because one of the reasons we had such a good financial run on the property sector after the GFC is the government allowed, foreign investment money to come to Australia. Now, it's a very debatable point. People go, oh, the bloody, someone else paid more. Someone else can afford more than me because they earn money from somewhere else, whatever. That's not the argument. But what happened was cheap money from somewhere else came to Australia because Australian money couldn't do the job. Right now, we've had our first project, Andy, with our clients fail in Melbourne because the construction cost went up 30% in the last 12 months. So when we sold that property, now because they couldn't start their construction because of COVID, their construction contract was out of date. It got reviewed, boom, up 30%. So thankfully, we only had about 13 clients in there. We had very solid contracts. We got the clients out. We've rolled them out. They haven't lost a cent. Some of them, may have thought maybe an opportunity cost there, but we've got them another opportunity. But the problem is the expenses have gone up to deliver real estate, and the money to borrow in the Australian system, because now foreign investment in that asset class is actually penalised, is now limited. We're actually going to see that even exacerbate unless the government does something about that one. Hey, here's something interesting. Guess which state, there's only one state in Australia where you don't have to, you do not get penalised for being a foreign investor at a 14% premium, a 14% fee. Every other state, 14% on top. Which state do you reckon?
Is it a state or a territory?
Well, it's a territory. Yes, let me be accurate. Which state or territory in Australia that if you're a foreign investor, that you do not pay a 14% premium on the price of your property?
On the price of the property?
Mm-hmm.
I've narrowed it down, right? It has to be one of the two. I'm going to go the ACT, and I'm going to say from a political perspective, but it would make sense to be Northern Territory as well, because it's such a it's the ACT.
The ACT, brother.
And the reason why they can justify that is because a lot of other countries have to purchase property out here for I was about to say asylum. That's ironic. For their what are they called? Embassies.
Embassies, yeah. Alison and Shay were right onto it too. They were right there in the chat, gang. And and stamp duty is actually tax deductible, 100% tax deductible in the first year of ownership of property in the ACT, which is very good.
All right. Just see, what do you think, Jace? I'm going to call something now that we're going to jump into the future. I'm going to call it, and I reckon it's a sure thing. What do you reckon the next tax is going to be?
The next tax?
It's coming.
It's coming.
It might be called a levy.
A levy. Shit, I don't know.
Let me stimulate this. There's the bushfire levy. There's the Medicare levy.
Oh, maybe it's the jobs recovery levy?
The COVID levy?
The COVID levy.
Whether they name it that or not, the COVID levy is coming.
Mate.
Absolutely, in my opinion, 99.999% coming is the question. But at some point in time, this amount of helicopter money that they've been dropping, so the Pied Piper has to be paid. Otherwise, the politicians can't get paid. And if the politicians can't get paid, they'd start working, and Australia would probably start working well.
Speaking of being paid, my friend, and jobs, while the private sector has slashed employment, the public sector has put on 22,000 jobs in the last quarter, and a lot of them have landed in Canberra. Hence why my world, we've launched a couple of projects in Canberra, which brand new properties renting at 7% yield. We're pretty happy with that sort of stuff in Canberra. So, do
you know why that is, Jace?
Because they earn the most in Australia. They can afford it.
So one of the I'm going to drop a hypothesis here as well, and I'm going to jump on Defence Force spending. And I think that a lot of that is actually landing in contracts that need to be geographically located in our nation's capital.
Yes.
For the political side of the equation. So there has been a huge amount of money dropped into defence. Like, there's been a lot of deals that are not televised. You have to sift through paper. You got to sift through policy and stuff that's just not making mainstream media at the moment, because I guess nobody cares. But there's been a massive spend in the Defence Force sector. And I don't know that that's the case, but I'm going to hypothesise that's it's a good potential as to the reason why that's happening.
Well, I think I remember Alison is listening right now, and I'm pretty sure, Alison, do you live in ACT, or you know a bit about the ACT, Alison? I think it was Alison who said last time that there was a lot of Defence Force personnel who there was not enough accommodation on base down there, and they had to seek, private accommodation. So, looking for a job. That's it.
Defence Force.
Well, little tidbit there. I actually built a climbing wall and a flying fox at Duntroon in Canberra many years ago. That was about 25 years ago. Back in my day when I used to have a different job, it was a lot of fun. But there you go. But mate,
so let's just rewind a little bit, because one of the things I want to share with you is this, is because you were talking about investment in Australia, foreign investment in Australia, and that's how we got onto the ACT. So
Yes.
if we have a look at this is a sleeping giant that nobody's talking about as yet, right? Quite world-renowned, safest banks in the world, AAA rated still, and we're getting onto some shaky grounds like the rest of the world, but it's relative, right?
Which banks? Australia's banks, right? AAA rated still, right?
Yep.
Yeah. Well, I mean, we're the top 3 or the top 5 banking systems in the world.
Yep. So when we see now, look, we're not back at parity, but we're 72 cents. I thought it was 72. I did say that earlier on today, and it's fallen a little bit. It's jumped up. So we're actually reasonably well priced against the rest of the world right now, and probably overpriced. And the thought is that there's going to be a 6 in front of our exchange rate at some point in time by economists. So it'll probably go to parity based on that. But so this is both a good and it's a good and good thing, and it's a bad and bad thing, because the good and good is that it's making offshore product cheaper, right? Your computers are cheaper. Our manufacturing companies in Australia, when we're getting stuff from the US, it's cheaper. So this will flow through in a quarter to 6 months to a year's time. So. Yeah. And this is the part that gets me excited, because this is the shit that people don't speak about, right? So companies now are getting stuff at far cheaper prices at the moment than what they have been previously, right? So we're able to buy cheaper goods, which means that 3 to 6 to 12 months down the track, we will see greater profit or cheaper goods, right, in Australia. One of the two.
Be greater profit, mate. Be greater profit. If they're listening to you or me,
it's greater profit.
Take the profit, employ more people. Take the profit, employ more people.
So then you have a look at some really interesting dynamics, like in Australia, and especially in Victoria, we think we're really bad, right? Bad because of what's happening with COVID, and we are. Like, I'm not like, it's terrible. The government's terrible. No, did I say that? Man's terrible. Anyway. Allegedly. Terrible.
Shake it out, mate. Shake it out. Shake it off, brother. Shake it off.
I've got to have a shower. I've been talking too much politics. But here's the thing, right? So you compare Australia to the US, and we were at an event just last week, and we had a number of American speakers who came in and shared some incredible stories. And one of them, Peter Crane, I remember going, and Kerwin said, "How are you doing, mate?" And he's going, "Yeah, not too bad for somebody who's sitting around with a bunch of fucking monkeys running a country into the ground and just watching everyone torch the streets around me." Something to that effect. I've paraphrased. But what we don't realise is, so there's a film and movie industry over in the US. There is a potential holiday market over in the US that's sitting there at the moment. And now, even though we're more expensive, we are Mr. Hanks is here now. Is the king of Hollywood. Well, I've proclaimed him the king of Hollywood. Hanks is here now filming. If you're a Hollywood actor, where in the world would you want to be filming right now?
Yeah.
Seriously, where in the world would you be filming right now if you're a Hollywood actor? And let's face it, these guys don't need to get out of bed, but Disney needs them to get out of bed. Netflix needs them to get out of bed. The cinemas of Australia and the world need them to get out of bed. Hollywood needs them to get out of bed. Where are they potentially going to come? They're potentially going to come out here, not now because we're cheaper, and we still are cheaper to film here, but ultimately with our COVID regime and the COVID numbers, we're a far more attractive place for them to start to come and visit. So
100%.
The dollar dynamic is a really interesting one. I think that we're going to see a lot come into Australia as a result of it. We're purchasing goods at a cheaper rate than what we have for quite some time, certainly when the pandemic hit. And there's a potential of that to roll forward. So then think about companies, think about stock markets, think about 0 interest rates or 1% interest rates and 1% return.
Way we go. Yeah. Well, I mean, one of Australia's staples of overseas migration from overseas, is our student population in Australia. So, I don't know if everyone realizes this, but to become a student or to come to Australia and be a student, you have to bring money. You can't come in with $3. The average student from India brings $100,000 in Australian cash the day they arrive here. And this is going to happen. So Australia is saying, well, look how well we did in COVID, gang. Like dovetailing in what you're saying, Andy, is like, well, and there's only one other country that's done maybe a smidgen better than us, and that's New Zealand. And really, they're sort of a state of Australia anyway. But
well, they claim to have all of our musicians and actors.
Well, they claim the Leamington and the Pavlova or something anyway. But they're pretty good at rugby, so we better not piss them off too much. But the reality is, if education is important to the rest of the world, I think Australia has doubled or tripled in a destination for education. Okay, so and if you were, let's say, if you lived in a not Australian, if you weren't an Australian right now and you were thinking, I'm going to send my 19-year-old daughter or son to a university, would you send them to America right now? Like, I mean, exactly. Well, what would you do? Would you say, where's safe for my son, my daughter? And Australia's the safest place on the planet right now when it comes to COVID, when it comes to political uncertainty, and a place that has a premium education. And I actually think, I've said this, I believe the students will lead the population boom, and Australia, whether anyone agrees with the policy or not, the only way we can increase our population base in Australia and our taxpayer base in Australia is to have overseas migration. The government cannot afford to leave it at low amounts. They cannot. It will bounce back hard. It will bounce back fast. And it will bounce back with more money than it's ever had. And when that happens in sort of 2022, 2023, the property market by default gets affected significantly and everyone gets jobs. But I suppose, and that's probably a good theme of tonight's discussion, man. It's like, okay, what's looking for a job in Australia right now? Where's the money? Where's the stimulus? Where's the people? What next? And maybe that's a good way to put a bookend on Wine and Wisdom for this week, mate.
And I think it is, and I'll wrap up with a few thoughts in and around that. Is that as we come into the budget, one of the things, and by the way, Jay, so we didn't plan this, but it's usually not maybe, but we're both in black tonight.
It's a uniform. It's a uniform.
Are our partners talking behind the scenes? What's Jason wearing today? What's Andy wearing today? All right, yeah, okay, cool. And all I have to do is put it at the front of the wardrobe, and that's the one. So we're easy to set up. Here's the thing, and so I'm going to leave it on a bit of a sentimental note in that, it's in times like these, it's in times in real struggle that character is built. It's in times in real struggle where leadership emerges. It's in time of real struggle where the voice needs to be heard. And when I talk about the voice that needs to be heard, it's our voices that need to be heard. And there'll be probably somewhere in the vicinity of 2,000 people who will watch this, and probably 1,500 business owners or thereabouts. And it's our responsibility to start to make noise in the right direction. So that means speaking to your local member. It means picking up the phone. It means writing a couple of letters. It doesn't. Some of us have got endless amounts of time. It's like, get off your ass, write a fucking letter and allow your voice to be heard. Create some pressure in and around this system. And the reason why I say that is because I truly, truly hope that as this budget gets dropped and announced, that a huge amount of stimulus actually goes into green energy and green resources, and something that is perpetual in motion in some way, shape or form, or a reasonable step in the right direction for Australia. And it doesn't mean deploying money into the same fucking areas as we always have, just to feed and line the pockets of the rich and the needy. It's about time that we start to talk about small business, get the tax cuts for the small business. It's about promoting green energy and getting us on the right track, because ultimately, if we still want to be as great as what we've been in the last 50 years, then we need to do something different for the next 50 years. Right? Because we've done fuck all in the last 10 years. And ultimately it's up to us because the politicians are not going to do it for us unless we create enough noise. And so I guess the message is that I'd love to see a budget that is full of a lot of green and technology and forward-looking things. The likelihood is that it might have some. But the one thing that we can change is actually writing to our members at this point in time. And as small business owners and as investors and as just people of Australia, pick up the pen. It doesn't take long. Type it out. Jesus, today you can use voice to text with Siri and type out the letter, but just mail that sucker off. It'll cost you about $5. But if we all do it, it creates the pressure. And what I've spoken to a few politicians and a few friends of mine, acquaintances. There's good people out there, and there's some great people out there. And the one thing that they've been staggered about is how small the voice has been. And I think that, our voices are quite loud in what we're talking about and how unhappy we are on social media, but just bring out the channels, flood the real inboxes of the people who count, and be heard. I know it's an old message, but I think it's one that we need to talk about, because today we bitch and moan on social media, which doesn't help anything. We've got to get to the source, and we've got to write to them directly so that they are heard on their Facebook pages, in their Facebook messengers. Just start presenting so that we can actually, because we're in a harnessing position right now, in that the policy and the decisions that we make right now are going to shape the next 50 to 100 years of where we sit.
Mate, no, that's a good one, buddy. And, actually I had experience today. I talked to someone who works for the banks, and, I've been guilty of giving the banks a hard time in the past. And, mate, I tell you what, mate, I tell you what, hate them or love them, they stepped up in this time of crisis and really did what they needed to do with not a lot of drama, to be honest. Few little wiggles here and there. So if you get a chance to say thank you to a bank that gave you a holiday, or a few of those people who did that stuff, because I think that's not a bad idea, Andy, mate. Write to your politician, get involved in our future, and say thank you to one or two of the people who sort of kind of, by and large, did the best they could, and it ended up pretty good for most of us, to be honest. There's no looting in friggin' Australia. There's no one, there's no breakdown in our social system, compared to, let's say, the US and maybe one or two other places. So say thanks, mate, get involved, go green, mate, it's a good way to finish. I think the world needed a rest, to be honest. And it's actually showing us all, by saying thank you with the recovery in heaps of places when it comes to nature. I'm a bit of a nature buff. I love my world of outdoors. But anyway, mate, great way to wind it up. Say thank you to everyone. Pratesh, one last comment from Pratesh. He said, look, overseas students want to contribute to Australia. Listen, I am absolutely, I love the idea that Australia is a place that embraces, everyone. And, it's a place you can come and do cool things. And Pratesh, mate, we love everyone who comes to Australia and makes the place, an amazing place to live. And I think we need more people from all over the world to bring some amazing perspectives and some great value. So Brian from Singapore says, let's make Australia great again. I agree, Brian. But let's wind it up, Andy.
All right, mate. Well, great to chat with you. Thank you, everybody. Damien, Amy, Julie, Jason, Craig, everybody on there, Margot included. Really appreciate you guys coming on board, and hopefully you've enjoyed it. And Jace, it's always great to share a wine with you, brother. So have a great weekend. Good day.
It's a long weekend for everyone except Melbourne.